Good morning, traders, and welcome to the XM Live. Wish you a very, very good day. And I think that we will have a great day ahead because today it's ECB decision. Yesterday, Fed decision. Markets are very nicely moving. Lots of volatility, guys, in the last, let's say, 10, 12 hours. So Asian traders could also benefit from it. Today, guys, together with Frank, we are going to tackle the markets to see the London Open and, of course, to talk about a little bit about upcoming ECB decision because today we have the panel. So
Uh,
don't miss our panel discussion later in the day. Frank, good morning. How are you?
Hello, good morning, Nenad. Great seeing you. Great seeing you. I'm doing well. Everything is fine. Was an interesting evening yesterday with a lot of popcorn, I would say, while while the Fed meeting. Very interesting press conference, I have to say. I was yesterday spending the time with Jerome Powell and the journalists, watching how they were discussing the meeting the FOMC board had pre, prior, and yeah, and now today we are seeing similar things to happen in the European Central Bank, and on Friday we see the same thing happen on the Bank of Japan, more or less, and so it's actually a week full of craziness, crazy volatility in the times of the announcements. Started on Tuesday with the CPI data, yesterday Fed, today ECB, and so on. And that's great opportunities on one hand, and there is opportunity is risk, or vice versa. Where is risk is opportunity, and then but that's the thing that we trade alike, actually, to have this volatile
Exactly.
markets, and we need that. We need that to make the points, and this is why this is probably one of the better weeks, actually, of the trading year, I have to say. So I'm doing well. What about
Yeah,
you?
that's great to hear. And I also would like to say just quickly about Fed. Of course, the XM instructors had the panel yesterday. So basically, Uh, we already covered it, right? But you and me and traders, let's discuss a little bit about it. So basically, what I think about all of this, what happened yesterday, they're just putting more debt onto the people. So when I saw this dot plot, which was 5.1 and now it's 5.6, right? To me, this is looking like it will just put more weight on the people's, uh, um, let's say, position to buy things in the future. It will create probably some more, I would say, demand-driven inflation. So this is, when you go to the stores, especially in the West, you will see the stores are full. When you go to restaurants are full. So there is no shortage, of supplies. So it's demand, actually. And this is what it can create a lot of problems in the future. I don't see the reason for two additional hikes, in my opinion. Let's cut it to the chase. I don't see it. I
Yeah.
didn't see it.
And very honestly, this is something as well. What he didn't give a prognosis that this will happen in the next in the rest of the year. He didn't say that this will happen. Uh, what he was very careful with doing some prognosis, actually. He was when he was explaining, or when he was answering the questions, he was very much like focused on that that they are very like determined to bring the inflation down to 2%, and he uses as well the word whatever it takes we will be doing
Uh,
to bring it down.
yes.
This he did, but he also said it does not mean that we are doing these two steps, because he said very clearly we don't know what will happen with the banking situation. This he also clearly stated. He said it's not unfolded yet completely. They don't see yet exactly the overall effects of this. It can still be something very very like critical coming. And but he also said, of course, because they are puzzled as well. You could feel this. He was he was once asking, or he was asked by a journalist, how it comes that inflation comes down um, when the people are further buying like crazy, and when the job market is still like powering, and if the GDP is growing, how is possible?
Supply is high. Supply is high, and this is actually
Exactly.
this is it. And
Yep.
this is what I'm saying. This is not a demand driven inflation. This is purely supply chain related. And in my opinion, what Fed is doing, they're treating it very wrong. uh, Especially because of the green policy. Yesterday I wrote it, and the reason why green policy adopting this green policy thing will spread it even further, because the cost of electricity will go up, because it requires green energy to produce electricity, and it will still be supply driven inflation. I
Yeah.
always say stores are full. People are buying things.
Hmm.
Restaurants are full.
Yeah.
People are buying new things. So it's supply driven, not demand. Demand is there, it exists.
But it's a good part of the supply is there. Otherwise, inflation would not get down at all.
Yes, yes, true. But I'm
the, the,
I'm really not sure that this is going to. Well,
and
it's not final, as you say. They didn't say we
yeah,
will do it. But
I mean, what they are afraid of, and this you could hear out, at least what I heard out is only what I heard actually, that they're afraid of like that they're getting now into a sticky stage of the inflation, right? That the inflation sticks now and it doesn't move further down anymore. And this is why they are opening the doors and saying probably it might need another two interest rate hikes of 25 base points to get there. This is what I heard out a little bit, because unfortunately the things that they were expecting to come, that they're getting the economy cool down, didn't happen. And I think as well it might not happen, because if this is going further like this, that we have the supply situation further continuing like that, and the supplies can like overcome the demand, or more or less like that, then I think we have a good chance to get it down as well, and without having a major serious impact on the people. And what I think they're doing good, I have to say, that they're not doing it now immediately. Their rate hikes. That they're waiting. They're pausing now. They're like he said as well very clearly. We would like to see what happens now. We would like to understand what's going further, what's going to develop, and then they decide meeting by meeting. And he didn't give an outlook at all as well on how it will be in July. He said it will be totally data driven, and yeah, so let's see how
yeah,
it's
they
going
still
further.
need to look the data, of course. CPI, PPI, unemployment, right?
Yeah, exactly.
But
Well,
anyway, what I think now is that market might be pricing in this, let's say, 0.50 total hike in two splits. So basically, if there is any surprise, like they don't do any hike because the data shows that they shouldn't do it, then it will be a bit surprising. And again, gold will bounce up, dollar will drop, but this is just projections. So I think that market will start pricing in two more rate hikes.
I think as well. I think this will now happen as well. I mean, they will pricing it in, and I think we could see now in the next couple of days some retracements are coming. I mean, at one point of time retracements are coming, but I don't think that we are turning into a bear market actually. I cannot imagine this. That we are immediately turning now into a real
No, 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 no.
into a real bear market, right? I mean, I I, I think they're too strong on putting their mandate to life again. To really get back to 2%. This is what he mentioned several times actually. This that he really would like to get back on it. Yeah. So let's look into trading opportunities about that, right?
Yeah, yes. Now I just opened today a small long position in the GBP dollar. So let's see if the market can push a little bit higher. Yesterday we had a nice push towards 27. And yeah, of course, after the hawkish Fed, let's say market dropped. That was like strength in the dollar. But I do expect pound strength to continue. Now, there are two ways where we could effectively see the pound strength. Either from this level where I'm long now, or eventually if the market drops to the second to the bottom of the moving average, like 26, because there is also strong order block. So now I still see this going up, but I just want to see if this retracement is going to end here. Because obviously pound now is in uptrend. We even have potential shimmer pattern. I would add one more position if the market breaks previous 4-hour candle high. So I will add one more position at 26.59. And my target would be, of course, above 27, something like 27.20. But of course, this is just now a little bit slower market. Again, markets are slow. We have ECB today. But again, GBP is not like dependent on European Central Bank. They are not so in they're not a part of European Union anymore, right?
No,
So I
no.
guess that it's free to trade. It's safe more or less to trade GBP today. uh, Euro will be tricky,
Yeah.
but somehow I still expect euro strength. What would you say, Frank?
That is an interesting question, I have to say. I mean, I'm, somehow I don't trust this team of Lagarde so much that they are really hawkish so much. But it's expected that they're like, because she somehow has this talent, that even when they are doing hawkish decisions, somehow to destroy everything. Why in the press conference always I have this feeling. So I don't know. I mean, yeah, in general, I'm with you. I also see like the euro strengths. I actually, but I think they would have to be really much more hawkish than the Fed was. I mean, they have to really like to beat them more or less with their hawkishness, when you can say it like that. And they have to also clearly formulate that it's not a discussion that we don't get there to the inflation rate. We have to think about the euro is still 2%. The eurozone, the euro area, is still 2% higher in inflation than the US. I mean, we have here still 6.1% in the euro area, and in some countries more, in some countries a little bit less. There's still way to go for the euro area. And when you're looking at a GDP development of the eurozone, it's weaker than the one that is developing in the United States. So they have a problem that they are feeling more the effects already of the interest rate hikes, but they know they have to do more. And in Europe, I think it could crash harder than in the United States from the economical development. Also, we have the geopolitical situation hitting the European, the Euro countries much harder than, for example, the US. And this is something what we have to consider, because everybody talks at the moment about how the gas price and so on is coming down. But very honestly, 2024, we have the time when the contract between Russia and Ukraine is over, that the transit of the gas, which is flowing a lot still into Austria and the Eastern European countries, right? It's totally getting off. And and probably they will not find another contract for these two countries. So the transit through Ukraine will be switched off, and suddenly we have losing another gas, and that would mean as well that suddenly the gas prices and energy crisis comes up again. And then what you mentioned in Europe, this whole green energy craziness that we are having,
Yes,
it costing a lot. What means craziness? I have to be careful with the formulation. Um, Let me say the green energy movement, especially led by Germany, like, because they were switching off all atomic power plants. Now they are buying atomic electricity from France, for example. And if this is going to happen with the gas pipeline, which is going through Ukraine, we have a huge problem, because suddenly we don't have enough energy anymore. And then, and our economy minister, he was saying already, I think it was 2 days ago, the German economy minister said, then they have to switch off the economy, the companies, because they would be in this situation. Nobody, Europe would not be able to supply all this energy at this very moment, if this scenario is coming to be true. And in my opinion, if there is not found a solution between Ukraine and Russia, and it doesn't look like at all like this, I don't know how this gas should be further transited through Ukraine. It will not happen. It will not happen. And then we are
yes,
really in a
this is what
dilemma.
I was trying, to imply many times, that this conflict needs a solution, because the Europe is in the biggest problem. US is not in the problem at all. Russia does what they want to do, obviously. and those sanctions obviously didn't hit them so hard as Europe would think. So the biggest loser is Europe. That's obvious.